And I'll be hearing from the Swedish startup hoping to slash the cost of stem cell production. Good afternoon, this is Business Live with me, Ian King. Ryanair has today announced plans to grow its UK traffic from the current 53 million passengers a year to 65 million passengers a year by the end of the decade. Europe's biggest airline said that in that time it aimed to create more than 1,000 jobs in the UK, including pilots, cabin crew and engineers across 22 airports. The news comes a day after it emerged that Ryanair has launched a lawsuit against NATS, the National Air Traffic Control Service here in the UK, over the network-wide failure last August, which saw thousands of flights grounded. Ryanair also unveiled an independent report from York Aviation, suggesting that it contributes £14 billion annually in gross value added to the UK economy and supports 98,000 UK jobs. I've been speaking with Ryanair's Chief Executive, Michael O'Leary.
I thought it was a useful way, particularly we wanted to kind of calculate what is our investment and our impact on the UK economy. Everybody knows Ryanair, everybody's heard of Ryanair, but most people don't appreciate the size and scale of our investment in the UK. We think we're now one of the biggest, if not the biggest, one of the biggest overseas investors in the UK. We've 115 aircraft based here across over 20 UK airports. That's an investment of over $10 billion inwards in the UK economy, and we're supporting about 98,000 jobs across over 20 UK airports.
Are you feeling a little underappreciated by UK policymakers?
Well, I mean, I think all airlines are underappreciated by policymakers. We continue to have this ridiculous APD tax on travel to and from an island on the periphery of Europe. We think there would be much more growth available, particularly in the regions of the UK, if they scrapped APD. We're hopeful that a new incoming Labour government will do that. The Tories have failed miserably over the last 5 or 10 years, despite promising to look at it. And I think we have a more positive message. We think we can grow our traffic from 53 million passengers a year to 65 million passengers over the next 5 years to and from the UK. That would be the equivalent of Ryanair carrying every single member of the entire UK population to and from the UK every year. And that growth will take place largely at regional airports, Manchester, Birmingham, Glasgow, Edinburgh, Belfast, if they just scrap this ridiculous and penal tax on air travel.
Is this increasing capacity going to come from putting on new routes or adding extra capacity to existing ones?
Well, firstly, it will come from our new aircraft orders, Ian. We've ordered about 400 new aircraft from Boeing, which we take delivery of over the next decade. We think we could pivot at least 20 or 30 of those new aircraft here into the UK, and then opening new routes at existing airports. We have opened one new base this winter in Belfast, but we're now operating at almost all the UK significant airports. But we still think we can link up, put in a lot of new routes to Italy, to Spain, to Portugal, to Greece, to Central and Eastern European destinations, where there's a lot of interest still in inbound UK and in coming to visit the UK.
You mentioned APD just now. You've obviously benefited from the fact that it was halved on domestic routes inside the UK. What kind of assumptions are you making on APD when you're making these kind of growth projections?
Well, I mean, sadly, the growth projection to 65 million passengers by 2030 is on the basis of no scrapping of APD. But the point we're making to governments, if you scrap APD sooner than that, we will get there much faster. The other point we've made to them is, fine, if you don't want to scrap APD, keep it maybe on the London airports, but scrap it on the regional airports. So you can kind of, they talk about lifting up the red wall or lifting up the regions. The best way to do that would be to scrap APD on flights to and from all the regional airports, and that again would accelerate that growth. We could get to 65 million passengers to and from the UK by 2027 or 2028. We can accelerate the growth because we have the aircraft deliveries. What we need is the UK government to play its part by reducing this unfair tax on passengers and citizens travelling between the UK and Europe.
You mentioned Boeing just now. Obviously, you've had to rejig some of your summer schedules because they're not delivering new aircraft to you as rapidly as we thought they would. What's the latest on that?
We're beginning to see green shoots of progress, I think. I've spoken with Stephanie Pope, the new CEO in Seattle. We're scheduled to get 4 aircraft in March. We got them. 4 aircraft in April. We're getting them. The 5 aircraft in May have, for the first time in 2 years, been moving forward a week or two, which is the first time for 3 years we've seen Boeing improve a delivery date. So I think she's starting to get her hands around the issues. Certainly, we're seeing better quality. No fuselage are being moved from Wichita to Seattle with any defects. So I think the situation is improving. It won't improve enough to get us 57 aircraft for this summer. But if we get 35 or 40 aircraft, that's enough to allow us to grow Ryanair from 183 million passengers last year to 200 million passengers this year. And I hope we're getting to the end of these production problems with Boeing.
Now, separately, we learned yesterday you've launched a lawsuit against NATS following the problems last August. What sort of remedies are you looking for here?
We want to recover the costs and the right to care costs, our compensation payments, which amount to about £15 million. When things go wrong in the airline industry, we have to compensate our passengers, and yet we want to recover those costs directly from NATS. We continue to call for the CEO of NATS, Martin Rolfe, to either step down or be dismissed. We think he's demonstrated he's incapable of running an efficient ATC service. We're the same size in the UK as we are in Italy. Last year in the UK, 7,000 Ryanair flights were delayed because of either NATS short staffing or system failures. Only 170 flights in Italy were affected by NATS delays. So, it's a terrible service that NATS is providing. We pay them over £100 million a year in ATC fees, and we're entitled to expect a better service.
Well, Michael Leary mentioned Boeing in the interview there, and we have some news on Boeing this afternoon because the recent grounding of its 737 MAX jets after the blowout of a door plug on an aircraft being operated by Alaska Airlines has resulted in Boeing suffering its first drop in quarterly sales since the April to June 2022 quarter. Well, Boeing burned through nearly $4 billion worth of cash during the 3 months to the end of March as quarterly sales fell to $16.6 billion, which was down 8% on the same period last year. The company delivered 83 commercial jets during the quarter. That was down 36% on the same period last year. Some other business news stories for you now. Lloyds Banking Group suffered a decline in profits during the first 3 months of the year, following a fall in the spread between what it charges borrowers and what it pays savers. Pre-tax profits came in at £1.63 billion. That was down 28% on the first 3 months of last year. The UK's biggest provider of mortgages and current accounts also cited a rise in costs, due partly to a new Bank of England levy on the entire sector. Lloyds set aside £57 million against loans it does not now expect to be repaid in full during the quarter. That was down from an impairment of £243 million in the same period last year. The shares have been one of the leading gainers on the FTSE 100 today. The healthcare products and household goods giant Reckitt said today it had benefited from customers trading up to premium products during the first 3 months of the year. The company, whose brands include Dettol, Cillit, Bang, Nurofen and Durex, said this enabled it to raise sales by 1.5% on a like-for-like basis during the period, all of which came from price rises. Reckitt cited strong sales growth in particular for household goods brands Finish, Lysol, Harpic and Vanish, as well as for Durex. The shares have risen by nearly 4% this afternoon. And staying with consumer goods, the company behind Imperial Leather Soap said today it's considering options for its Africa business. PZ Cussons said that although it owned a highly attractive group of assets in the continent, it recognised that it was a complex business and was therefore evaluating its strategic options, both to reduce risk and to maximise shareholder value. Manchester-based company is also putting up for sale its Saint-Tropez self-tanning brand, which is favoured by personalities such as Kim Kardashian, after concluding it did not have the resources to realise the brand's potential across the United States and elsewhere. The share's currently ahead by some 6.5% on that news. Now, stem cells, which are cells that have the potential to develop into different types of cell in the body, are transforming healthcare. But there is a global shortage of stem cells that comply with international standards. Well, that was the thinking behind the establishment of Celco Labs, a Stockholm-based company which is aiming to reduce the cost of stem cell production. It's just raised $8.7 million in venture funding, taking its total funding to date to $21.5 million. Well, joining me now is Matthias Bernau, Chief Executive of Celco Labs. Welcome to you.
Thank you.
Why is there a shortage globally?
Well, globally, the production are made mostly by minor companies, biotech companies in the space, or by university hospitals producing for their specific patients. There has been no one taking the bigger picture into this, and there's roughly hundreds of ongoing trials in this area. And as everyone is producing for their own, that's very expensive. So it's a classical industrial approach, large-scale production to be able to democratize the access, meaning bringing down the prices and making them available, and thereby accelerating research.
Now, there are lots of different types of stem cell. You're focusing on one in particular called mesenchymal stem cells. What do they do?
They have three basic properties. They are anti-inflammatory, regenerative, and immunomodulatory, meaning that they are basically interesting for most of the chronic diseases. Aging is also an interesting field, but I would say you could throw a dart at a hospital organogram and whatever clinic you hit, there is an ongoing trial right now. But it is expensive, and it is hard, as you say, to come by the highest standard cells. That is called GMP. And those cells, the lack of them, that sets back the research as such. So we're all about large-scale production to help accelerate the science, because the science is what will actually get us approved cells so that they can be accessible for NHS, for example.
And this is how you're going to bring down costs, is it? Essentially, it's by producing on a large scale.
We're very lucky to be able to base our production on 20 years coming out of Karolinska, and one of the world-renowned professors in clinical stem cell research. Based on the tech transfer after the COVID epidemic, when they were allowed to do a clinical trial in Sweden on the people on ventilators after severe COVID. And they were approved by the Swedish FDA to do their clinical trial on 10 patients. The cells that they ordered only sufficed for 7. All of them survived, by the way. And out of the frustration, knowing from the general science that those cells have a very preferable safety profile and the potential that they do have, they said, this is not good enough. We need to set up industrial scale production. So the professor actually said, here are my protocols. This is how produced according to GMP. And the investor said, we can't say if this is going to be medicine for cardiac failure, for COVID, for diabetes, but we're going to build a platform. We're going to make the cells readily available for all researchers and patients in need. And in time, we hope also to slash the prices.
How much does regulation concerning the use of stem cells vary around the world?
It varies quite a lot. Biggest parts of the world, Europe, US, UK, have quite a stern framework. What happened in 2012 was Japan received the Nobel Prize. They realized that they're at the front of stem cells, but also realizing that this will never be commercialized. So they changed their framework. And what we're now seeing around the world is that more progressive governments, they're looking at the Japanese and the Korean framework. And as that changed, more and more products hit the market.
And just to be absolutely clear, you are involved in stem cell production. You're
Yes.
not involved in the use of treatment involving stem cells.
As a company, we're all about production. We sell to 5 countries on 3 continents. One of our subsidiaries, or 2 actually, run clinical trials as well, but that's a bit on the side. Our main customers are outside our company.
What about the competitor landscape?
One would like it to be even better. The problem is that most of them are so small, and small scale makes expensive even more expensive. So that is why the approach with industrial scale production can actually help the hurdle of making the cells available and affordable so that the research can be accelerated.
Would you worry about Big Pharma going into this field, and is this something that they would ever think about, do you think?
I would love for Big Pharma to go into this field. The more competition, the better for all of us. There's a huge need of financing of the clinical trials. While we can produce the cells and make them available, there's a lot of research that needs to be done. Even though their properties are well known, their benefits are well known, their safety profile is well known, there are still a lot of research to be done on many indications.
OK, Matthias, it's a fascinating subject. Thanks for joining me today to talk about it.
Thank you.
Bit of breaking news to bring you. We've just had the first reaction from TikTok to the approval of a bill that could see it banned in the United States over safety fears. A TikTok spokesperson has said this unconstitutional law is a TikTok ban and we will challenge it in court. We believe the facts and the law are clearly on our side and we will ultimately prevail. The fact is, we have invested billions of dollars to keep US data safe and our platform free from outside influence and manipulation. This ban would devastate 7 million businesses and silence 170 million Americans. Fascinating response that from TikTok. No doubt we'll get a bit more on that throughout the evening here on Sky News. In the meantime, still to come here on Business Live, we'll have all the latest from the markets. Don't go away.
I'm Martha Kellner and I'm Sky's US correspondent based here in Los Angeles.
It's turning everybody into, a crazy, violent drug addict.
How are you feeling?
I am angry. Legal abortion! It is an anti-woman agenda.
2 women say that you paid for their abortions. Are you a hypocrite, sir? Will your candidates win?
I hope so. I think they will. I think they're great candidates.
I gotta be realistic. My sister's dead.
More than 4 weeks on, there's no murder weapon and no suspect. Are you going to catch this killer?
We are doing everything we can.
Ghislaine Maxwell has pleaded not guilty to all 6 charges against her. Mum, how are you feeling today?
Jeffrey said, you answer to Ghislaine, you just don't cross her.
We're so excited.
Severe nightmares of these people coming in and just taking me in the middle of the night.
I've watched as whole towns were torn apart by natural disaster.
I'm alive and I'm thankful for that, but there are a lot of people who aren't.
It's not the winds people fear most here, it's the water. We take you to the heart of the stories which shape our world. Do you truly believe what you're saying?
A lot of cases that I know are reported from Ukrainian missiles themselves.
Ambassador, with respect, I think that's preposterous.
Emirates premium economy. Maybe one day all airlines will have seats like this. Fly Emirates. Fly better. Thank you.
Welcome back. Let me take you through what's been going on in the markets today. And after a positive start to the session, European stocks have sold off this afternoon. Here's how they finished in continental Europe. All of the main indices in negative territory. Stacks of company trading updates to get through today. The main talking point has been Kering, the French luxury goods group behind Gucci, which has fallen by 6.5% in Paris, following a profits warning. Also lower today, again on a trading update, is the Swiss pharmaceuticals giant Roche. That's off 3.5% in Zurich. Well, here in London, the FTSE 100, it was too good to be be true, wasn't it? We had 2 days of record gains. FTSE 100 has finished very, very marginally lower in mixed trade. The biggest blue chip faller this afternoon is Croda, the specialty chemicals group. That's fallen by 4.75% on a trading update. Meanwhile, Burberry is off by just over 2.5%, and that's in sympathy with Kelly. To the upside, will Reckitt. We talked about them earlier on the programme. That's up 4% nearly on its first quarter sales. Well, BAE Systems up 1.75% on news of a new partnership with the US auto components group Cummins. Outside the FTSE 100, again, another stock I mentioned earlier in the programme, PZ Cussons. That one's risen by 6.75% on its strategic review, while the wealth manager Quilter, that's risen by 2.5% on a trading update. To the downside, the building materials supplier Breedon is off by some 4% on news of a fall in quarterly sales. Over on Wall Street, well, I think this is why Europe has finished lower. You can see the Nasdaq is up there, but the Dow Jones and the S&P 500 are both in negative territory just now. They've been trading to the downside for most of the session thus far. Although, interesting talking point, toy maker Hasbro, that's risen by some 12.5% after its quarterly profits came in ahead of expectations. Meanwhile, Tesla, which we were discussing on our morning programme, if you saw that, well, they've currently up around 11% or so. That's on news. It's pressing ahead with affordable vehicles in the near future. Notable fallers include AT&T. That's off by 0.5%, despite its quarterly revenues beating expectations. On the foreign exchange markets, here's the current picture. Sterling off 1/6 of 1% against the dollar, unchanged against the euro. The single currency likewise off 1/6 of 1% against the greenback. Meanwhile, after spending most of the morning in the doldrums, the oil price, well, it did perk up and it slipped back into negative territory again. There was a drop in US inventories, which moved it early in the session. Barrel of Brent crude currently changing hands at $87.86 a barrel. That is off nearly 2/3 of 1% on the day. Well, joining me this afternoon is Alex Stewart. She's credit portfolio manager at Schroders. Alex, great to see you as ever. We heard from Lloyds earlier on in the day, UK's biggest mortgage lender, of course, via Halifax, but there's been a lot of talk about mortgage rates starting to tick higher again. Why is that the case when everyone expects interest rates to come down this year?
Well, exactly. I mean, we are expecting that there will be rate cuts this year, but mortgage rates are having to go back up again now because they fell in anticipation of rate rises and rate cuts, rather. And we thought there would be rather more this year than is looking likely. And, you know, it's been putting pressure on the banks.
We had a big gilt auction today, 30-year gilts, which is the sort of long end of the yield curve. Record yield of 4.7818% for a syndicated gilt sale. Why would people be concerned about that?
Well, I mean, that just shows how much that the long-term expectations of where interest rates could be and kind of settle have got to. As I say, I think everybody was thinking coming into this year, we would get rate cuts, we would go back to the lower levels of interest rates that we've been used to for the last 10 years or so. But it's now looking less likely, and the market is now saying that longer-term rates might be nearer 5% rather than 4%.
Yeah, I mean, it's interesting. I mean, obviously, we've had longer US Treasury yields sort of backing up towards that level as well, haven't we?
Yes, I mean, it's the same thing there. In fact, they're actually questioning whether there'll be any rate cuts at all this year in the US. And, you know, they're beginning to think the same in the UK, but we do still expect that there will be a couple.
If one was to take a glass half full look at this, you'd say, well, hang on, this particular gilt auction today was very heavily oversubscribed. There were lots of investors who wanted again at this sort of price. I mean, I guess it proves that if you sell anything at the right price, people will queue up to buy it. But I guess it's also quite good news for the UK government. There is still a big market out there for UK government debt.
Well, that's exactly it, and especially with the longer dated ones. And if you look at pension funds and, you know, people with savings and so on, when interest rates have been very low, it's been very difficult for them. But now that we've seen rates back up a bit, it's actually much, much easier to lock in a kind of decent return on what is a safe investment.
We had the UK public borrowing figures yesterday, which, again, is very pertinent to the gilt market, very pertinent to what you do. What were your main takeaways?
Sorry?
From the public borrowing figures?
Yes, sorry. Yeah, I mean, that's the thing. They weren't nearly as good as, you know, we had been expected and what the expectations actually were. And, you know, it's quite likely that, you know, the giveaways that they might have been hoping to be able to do ahead of the election are going to be that much harder to fund.
What's been going on in corporate credit markets over the last few weeks, given this sort of changing rates expectations backdrop?
It's been quite interesting, actually, because credit markets have held in remarkably well. I mean, usually with rates rising, for the investment grade part of the market in particular, it tends to be quite bad news. But I think, as we were mentioning earlier, these higher rates that you can actually get have been attracting people to buy them. And, you know, the extra bit that you get from corporate credit has been that bit more attractive.
Flip it around to the seller's point of view. If I'm a corporate treasurer right now, should I be hanging on for a bit and waiting for the Bank of England to move?
Yeah, I mean, I think so. We saw that last year when rates were, the expectations were that rates were still going up, that corporate treasurers were just, if they were funding at all, they were doing it at the front end of markets, and they weren't wanting to lock into longer-term funding. And presumably with the rates back up at these levels again, they're not going to be wanting to do it much here either. Yeah. So they'll be hoping that we can get slightly lower and better borrowing costs.
So quite a quiet summer lies ahead of us then?
Probably. But then every time I say that, it isn't. So we'll just have to see what happens.
Yeah, don't worry, Alex. We won't hold you to it. Okay. Got to leave it there. Good to see you this afternoon. Thank you. That's it from me. By the way, if you scan the QR code on your screen right now, you can read my online analysis of why the FTSE had hit a record high 2 days running. As I say, it's finished slightly negative territory this afternoon. Well, that's it from me. I'm back again with our morning edition at 11:30 tomorrow. Hope to see you then. Stay tuned. Mark Austin's up next. Cheerio.